Hi, Peter Jones, Chartered Surveyor, author and property investor, and today I want to talk a little bit about borrowing and lenders' criteria. So the good news is that there are lots and lots of buy-to-let lenders who will be very happy to lend most people the money which they're after. So if you're thinking about getting into property and thinking, would anybody lend to me? The chances are, yes, somebody will lend to you. The only thing which might vary, usually, is the terms. So here are some of the things that you need to be thinking about if you're thinking about taking on finance. Well, first of all, most lenders will be thinking about your credit report. Now, that's not necessarily the same as the credit report that you get from somebody like Experian or Equifax. Most banks have their own kind of version of a credit report, but they will probably refer to Experian and or Equifax or one of the credit rating companies in order to produce your credit report, and they'll also look at you and they'll answer their own internal questions to come up with your credit report. Having said all of that, it's very, very important that you maintain a good credit report with external agencies such as Equifax and Experian. And if you want to know what your current credit rating is, then you can actually download a copy of the report. Now, I'm with Experian. I'm not saying they're any better or any worse than any of the others. It's just a matter of convenience that I signed up with them. It costs me £15 a month to be able to access my credit report, which, to be honest with you, I don't really like paying. But there have been times when I've been applying for a mortgage and my broker has said, can you get hold of a copy of your credit report? And I've been able to download it and send it off, and that's made it a lot easier to borrow the money that I've needed. So maintain your credit rating. Go online, go onto Experian or Equifax or one of the other sites and find out what your credit rating is. And if it's not that good, then you need to start thinking of ways to improve it. Ironically, one of the ways that you can improve it, for example, is borrowing more money as long as you pay it back. They'd like to be able to see that you're sensible and mature, I suppose, if that's the right word, when it comes to borrowing money. I sometimes meet people who want to get into property and they're very pleased with the fact that they haven't got a credit card. But the reality is that if you haven't got a credit card, a lot of lenders don't want to touch you. Why? Because they don't know whether they can trust you with money, because you haven't got a track record of borrowing and paying it back. So have a look at your credit record and your credit rating. That would be the first thing. Second thing to remember is, in terms of banks' criteria, most buy-to-let lenders will want you to have some kind of a salary. And mainly, they're looking at a salary of a minimum of £25,000 a year. Now, the good news again is, if you don't earn £25,000 a year, then you can make a joint application, and some buy-to-let lenders will allow up to 4 applicants to go on the same application. So maybe that's a way around it if your income isn't quite there. The other thing which they'll be looking for, usually, is that you're already a homeowner. A lot of buy-to-let lenders, they don't want to start you off in property investing until you've got the security of your own home in place. So those would be the 3 main things. Now, if you're not sure, and even if you think you probably do qualify actually, this is for everybody, do get yourself a good broker, a good mortgage broker. A good mortgage broker is worth their weight in gold. Don't try and borrow money by going on to comparethemarket.com or moneysupermarket.com or whatever. They're great for things like research, and they're great for things like car insurance, home insurance, credit cards, blah, blah, blah. Not so good for mortgages. Just think of this. There's about 1,400 different buy-to-let mortgages on the market, and it's impossible, if you're not in the business, if you're not full-time in the business, to know exactly what the bank criteria is and which product is best for you. So get a good broker, absolutely essential. The other thing to remember is, even if you don't quite meet the criteria on the face of it, a good broker can have a chat with the underwriter of the lender and can say, Mr. X or Mrs. X is a bit weak in this, but they're very strong in this other area. Would you consider them? And sometimes having that personal approach can actually swing things. Whereas on looking at the stark facts, looking at the lending criteria on the website, you might think that you're disqualified. The reality is, my guess would be, no matter what your circumstances, there's usually a lender out there who will lend to you, but the only difference is going to be the terms upon which they lend. If you're not that lendable, then maybe they'll just charge a little bit more. So it's always worth having a go. Now, the last thing I'm going to say is, when you've got a broker, you could talk to them about the possibility of getting a decision in principle, a DIP, D-I-P, decision in principle, which you can then use to assess A, whether you're going to get lending, and B, before you start the mortgage application, you can actually go to an agent, for example, with a dip and show that you're essentially in the same position as a cash buyer because your finance has been pre-arranged. So there we are, a few thoughts on finance and bank criteria. Hope that helps. See you in the next video. Here's to successful property investing.